Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The overnight price action trims back some of its losses for the Australian dollar after it initially fell to a low of 79.54, right in front of that support at 79.50. Since rebounding, the market still is struggling to sustain towards that 80-cent handle after this morning's drop is now looking back towards the downside. Earlier in the morning of yesterday, Australian job data jumped by 54,200 compared with gains of 17,500 seen in August. The unemployment rate remains steady at 5.6%. Elsewhere in China, it released its fixed asset investment for August, which came in at 7.8, below the 8.3 expectations. The industrial production rose by 6% compared with the 6.4, and retail sales increased by 10.1 from the previous 10.4. Although the Australian dollar initially responded positively to the upbeat job data, it still seems unappealing to the bullish case. And with the technical implications still remaining negative, supports my view with 80.20 capping on the day. A mixed overnight session with the euro, which was on its bearish path at one stage as it looked towards the 118.40-45 before rebounding from the low of 118.36 back towards the 119 handle. Overall, I'm still bearish and I still expect to see further weakness. Also overnight, the US CPI number came in better than forecast of 0.3 to 0.4. The unemployment claims fell by 19,000 to an seasonally adjusted 284,000 in the week ending in September, reported by the Labour Department. So with the Fed still penciled in 3 rate hikes for this year and also gone twice by 25 basis points, the meeting next week for the FOMC will be read closely to the statement and see what the Fed's thinking in terms of the recent high CPI number coming out. Some Fed officials have been cautious about another rate hike this year, but from the figures coming out overnight could all change this view. So we need to keep a very close watch to that. Overall, I still, as I mentioned, am bearish, and any advances should struggle towards 119.20-25. As my fears for dollar yen, the market has, as you can see, rejected the high 110 region overnight. Now, this was mainly on the fact that the geopolitical tension with North Korea and the US has flared up again, with the North Korea firing a missile over Japan this morning. The missile flew over Japan and landed 2,000 kilometers out at sea to the east of the country. South Korea called an urgent meeting this morning to the National Security Council, and the South Korean and US military were analysing details of the launch. The Japanese government did tell people to take shelter and warn them to stay away from anything that could be debris. The missile was in the air for 19 minutes and appeared to have followed a similar flight path to the other missile that was launched on August the 29th. So with the geopolitical tension heightening, is the fact that we could have seen the highs from overnight and now look back towards a 109.45. If the tension increases, or even over the weekend, we could easily fall back towards the 108 region. So do be a little bit cautious in case the market is now being caught long. The Bank of England overnight signalled that it was preparing to raise interest rates within the coming months to restrain acceleration into inflation in the UK. This is the latest sign that the major central bank is bringing possibly an end to an age of low interest rates. The Bank of England has now stepped up towards a tighter monetary policy. And let's not forget, however, the Bank of England still faces difficult departure to the exit of the EU, which is still weighing on the UK economy. So overnight, the Bank of England's latest policy meeting left its benchmark interest rate steadily at 0.25%. However, Monetary Policy Committee said that the minority of the officials to the 9-member panel believe borrowing costs will need to rise soon to bring an annual inflation back to around 2%, its goal. Let's not forget, earlier in the week, the annual inflation upbeat number, CPI, came in at 2.9. Previously was at 2.6. So this is actually going to cause a little bit of a stir in the market. And as you can see from the overnight price action, the market rebounded off that 131.80 support and now looks towards the resistance of 134.40.50. A break above there would give further scope to the upside and bring in a target of 136. Dips likely to be shallow towards 133.40 to 132.70. Well, the gold overnight did challenge that level of 1,318.20, which was the uptrend, and held respectively. From the rebound, and mainly because of what happened this morning, gold benefiting as a safe demand haven, should I say, safe haven demand, strengthened from the fact that North Korea did launch its second missile over Japan. With this has now intensified the tension in its nuclear standoff with the US after firing its ballistic missile this morning, and now gives concerns of where to go next. If the market does hold its stance, then we could see a further rally due to the fact that we did break 29, and we could be looking up towards 36.42 to even 50.52 as a potential target. So any dips on the day likely to be shallow. Along with silver, as you can see, the market rebounded off that $17.60 support or uptrend and now looks back towards a minor resistance at 90 and a cap at 18.25. But the technical implications are still slightly to the bear case. So today could be a non-event and maybe a sideways price action. And to wrap up with oil, well, my target has been achieved at $50 a barrel and now looks, I should say, extends to $52 and reassess from there, with any dips on the day likely to find support around 49.5. So that wraps up my daily video. Thank you very much for joining me. I hope you have a wonderful day and a great start to the new weekend.